As of the end of September, the foreclosure moratorium for FHA ended and delinquencies are up. And we're going to find out what is going on with mortgage foreclosures. It's something that we haven't seen for about 5 years. I mean, there has been an uptick in home foreclosures. We are starting to see where the auction sites are presenting these houses, and even locally here in Maryland, we have local auctioneers that are now dealing with some of this foreclosed inventory, but it's still very light. And we know in the industry that this is a big inventory problem because foreclosures through the years are just a part of life. For whatever reason, someone loses their job, their financial situation changes, their health declines. For many different reasons, every single year, we see a certain percentage of mortgage foreclosures. And not all of these properties are distressed. So when you think about someone losing their home, now we really have to look at the particular situation and say, well, just how long has the borrower not been paying their mortgage? And in many cases, it's been 4 or 5 years before the bank actually decides to foreclose on the property. We know that through the pandemic, foreclosures were halted. Through this moratorium, there was over 1 million households that actually went through some type of loan modification, if not just one time. The borrower has gone through 2, 3, 4, 5 different modifications where all kinds of things have happened to try and help this borrower stay in the house. Because we know that for the most part, when people aren't paying their mortgage payment and the servicer steps in and continues to pay their homeowner's insurance, their property tax bill because they need to be paid, the borrower's not fixing anything. So what we learned going through the GFC, the Great Financial Crisis, is that many of these houses that ultimately were foreclosed on, millions of them, the houses were in complete disrepair. And the only ones that were really buying these properties were investors. And then what we've seen since 2019 is that people not paying their mortgages, we're falling into that same type of distressed property. Things haven't been fixed or worked on for 4 or 5 years. And what they're doing is, and what they have been doing is Fannie Mae and Freddie Mac have been bundling up these defaulting loans. They're either called a NPL, which is a non-performing loan, or an RPL, which is a re-performing loan. What they've been doing is selling those off to investors in bundles. And again, this is stopping the inventory from hitting the market so that owner occupants can buy this housing stock, and it's preventing that from happening. John is an REO broker. He's in Chicago, and REO means real estate owned. So for years, this has been his specialty, working with the banks in selling this distressed inventory. Here's the man of the hour himself, John Hoffman. Welcome back to the show, John.
What's up, man? I'm in like that.
That you went to this distressed asset conference in Dallas, Texas. You just got back from that. Give us an overview of what that was like.
I think the biggest telling thing is that in the HUD meeting, which was FHA, VA and all that, they basically straight out told us 2026, 2027, foreclosure activity is going to spike high. They said that most of it's going to be driven from the loans originated from 2022 to 2024. And I had actually challenged one of the speakers in that. And I had said that, I go with the gates coming down October 1st for the FHA workouts, what kind of mess do you see coming? And I told her, I said, FHA delinquencies are like 10 or 11% right now. But she said, oh, no, the delinquencies are 4%. It's like, well, I don't know, Mortgage Bankers Association, I'm like, oh no, they're saying it's 11%. So, that's a pretty good source. And she goes, well, I guess it just depends on where what source you use. Okay, let's just, move that along. There's nothing to see here again. It's all in front of you. It's all coming right now.
I mean, one of the things the administration wants to do is privatize Fannie Mae and Freddie Mac. That could affect the IPO if there are high delinquencies.
If you looked into that, though, he wants to privatize them with their backing. So is it privatized or is it not? Basically, they're going to privatize it so everyone can buy into it. but they're not. But if they get into trouble, they're going to step in and save them. So I mean, you know, it's all just more of the same. You know, they want to just keep the hot air in the balloon, keep it going. None of our leaders want to come out and go, look, we're going to have some tough times. It's going to be tough. We're going to have some foreclosures. We're going to get this, but we're going to get these asset prices stabilized so that it's normal again. Nobody wants to do that. Time to move on. Get these people, if they can't pay, and I'm not saying you don't give them a workout. Give them a workout. Great. Can't do it. You're out. You know, it's time to get inventory back to a normal pace. Trump called for, and this isn't political at all. I mean, I don't buy in any of that stuff, but it's like he says he might call for a housing emergency. So I took the liberty of looking up the definition of emergency. It's basically it's something that happens that causes desperation that comes out of nowhere. It's unexpected. It's an unexpected problem that you run into, and it's like, well, you know, so how is it unexpected that we have this housing is such a mess? I mean, part of most of it's your problem because the people that are staying in these homes that you don't bother moving these along and keeping the inventory moving. That's your problem. You guys have caused that, and then keeping the rates too low. You guys have caused that. I mean, this it's an emergency. No, it's not. You guys have been at the wheel of this truck going over the cliff the whole time.
Do you think we're going to see a massive influx of foreclosures?
Absolutely. Next year. I keep saying it, middle of next year to late next year is when it'll be front page news. They're going to probably try to step in when this FHA thing goes south, because you're not going to hear nothing until March next year. You'll probably early in the year, you'll start seeing these start to fall over and tip over and stuff, and then it'll catch fire because now people are going to try to sell. Now they're going to go, oh crap, I've already used my one workout. Well, I got to sell, and now you're going to see an influx of properties coming on the market. What's that going to do? Drive the prices down quick. I mean, I'm already seeing it. And we're not even there with the foreclosures yet. I mean, foreclosures are up, 18% from 6 straight months. They're up from 18% from a year ago. And foreclosure filings are up 6 straight months.
I mean, it's a mess. Hey guys, I hope you're enjoying the show so far. I just wanted to take a brief minute and share some exciting news. I have just released my new Todd Simple home buying course. This course is designed for anyone wanting to know how to buy a home. It's designed to take you through the entire home buying process from start to finish. You'll learn how to represent yourself should you want to avoid paying real estate commissions, the best ways to shop for a home, how to avoid costly mistakes, what to look for when touring a home, negotiation tactics, and so much more. In this home buying course, I hold nothing back. In fact, I would go to say that no one has uncovered the home buying process like I have. I've even made a way for you to gift this course to your family and friends. Visit saxrealty.education. The link is also pinned in the comments below. Now back to the show. Are you expecting that they'll come out with another workout if foreclosures really spike?
They will do anything and everything they can to keep it out of the system. They're going to run out of rabbits to pull out of that to keep it afloat. The jobs are crap. People are losing their jobs. That's when you start seeing that pain, and you can't do anything about it. You can't just keep, refining these people. You can, but if you're going to make this where they have to actually stand on their own 2 feet for at least a year or two, it's not going to work. Because most of these people that have these 7, 8, 9, 10 workouts in the last 4 years, and I've got them all. We're mailing them every week. It's like they should already be gone. And one of the things too that's kept people, and there's people that are sitting on a brink going, well, my house is, I know it's worth $350. That's just their number that Zillow tells them. I know it's worth $350, and but I don't have anywhere to go, and I know I got equity, so they kind of hold on, and everybody keeps holding on and holding on. And what's going to happen is like it's happening now, as you're getting these new listings. Boom, well, that's cheap. Why is that? Why did they list that? That seems kind of cheap. Boom, there's another one. Boom, and that starts dragging that down. So these people going, hey, I'm worth $350. Now maybe they're worth $3. And I know that's one of the things that's causing is people just don't have anywhere to go. They're like, I'm holding on for dear life, man. Give me another workout. I'm sticking around. Just 6 months, I'll be able to turn around. They're not going to turn this around. I mean, the houses, most of these houses, I've sold 3 of them in the last 4 months, 5 months. They're all wrecks. I mean, I get there and they've been staying afloat, not paying the mortgage, giving them workouts, and the house is a wreck. They don't have the cash. The insurance, the taxes, the HOA fees, all going through the roof. I mean, homeowners insurance now, what are you seeing? Is it like $2,400 a year for a house?
I mean, it depends. It could be 7,000 a year for a house. It depends on the value of the house.
Yeah. And 8 years ago, it used to be 600 a year. So now it's like, where did that come from? And that's what I'm seeing too, is like people that have owned their house for like 6, 7 years. They're like, John, just get me out of here. I can't afford it anymore. And he's got equity, but the house is eating him alive.
Talk about zombie properties. A lot of people don't know what they are.
Oh, zombies. Yeah. Those are basically, vacant homes that haven't been foreclosed, or some of them have been, I guess, but they're just stuck in the system. And one thing at the conference we were learning was that they don't want to take those back because they don't want to be wrong in how they process that foreclosure. So those just sit and they turn into blight for the area. No one's cutting the grass because they haven't moved through the system, because the laws are so tight on the servicers that they do something wrong. They're like, we could be held liable, I mean, like personally, which is nuts when you think about it. I mean, the whole system of housing is just this convoluted mess.
So when somebody vacates a house, it becomes hard to determine whether they have truly vacated it, whether they're staying somewhere else, whether they have their personal belongings still in there. And what you're saying is that it's illegal to rekey that property if it's not in fact vacant. And I mean, there could be criminal prosecution on.
That's what they're saying. They're like, we're worried because, so we're just like, yeah, we're going to leave that over there and we'll wait. And they're trying to get more information on how to handle this. It's like, okay, well, that's another backlog. We can just set over there and wait for that to come through. I've had properties when I was busier in REO where I had one in Aurora that we went to the house, the gas was locked out, the water, call the city, the water's off, break in, there's a family of 4 sitting there. We're like, what in the world is this? But that was, I mean, that's what I mean. You just don't know,
And it could be dangerous too, I would imagine.
Oh, yeah, it can be dangerous for sure. It's been dangerous. Just doing BPOs has been dangerous,
Tell us about that.
Oh God, I had one, Oswego, Illinois. It was a drive-by and this guy came out running out from his backyard. I took off. I had my pictures. I took off. He caught up to me at the light and he's like, "Do you ever come, you come near my house again, you're going to be in for, it's like, great, dude. I'm just doing my job here, man. Filling in the bank, I get pissed off at the banks because it's like, you guys string this out too long, and these guys get comfortable with this. Like, the evictions, they're like, this is BS. It's like, dude, you haven't paid in 4 years. We offered you 12 grand to move 2 years ago. Why? What do you mean this is BS? This has been a free place. You didn't even have to pay taxes on it. We need to get back to common sense. Hey, you can't pay. Great. Let's give you a workout. Get back on your feet. Boom. A year later, year and a half, that don't work. Then, sorry, man. Sell it. Hopefully you get some money out of it and move on. The whole thing is just, it's nuts. Completely nuts.
What do you think if somebody stopped paying today their mortgage payment, how long would it take for them to be foreclosed on?
Oh God, depends where you're at. Illinois is probably 2 years. I think some states are probably maybe 9 months. But Illinois is hey, no worries, and to evict them that could be 6 to 12 months. I mean, that's why they have a life cycle of set like 2 to 3 years right now, and that's like minimum.
When somebody files for bankruptcy and they're living in a house, what does that do for you as an agent, a broker that is moving forward in helping the bank foreclose that asset? Do you have to halt everything you're doing at that point?
Yeah, it's over right there. As soon as I had one of those in Naperville, Illinois, and we went to evict him, and he filed bankruptcy. And he was standing outside with the sheet. Look, man, see ya. Have a nice day. We're like, let's go. Yeah, it freezes everything. I can buy them a year. I can buy them lots of time.
I want to pull up a couple photos of slides that you took when you were at the conference, and maybe you can just kind of tell us what we're looking at.
Yes, the majority of this is from HUD. Majority of VA borrowers, DTI 43%, greater than 43%. That's pretty strong. That's like half their money going to that. And when you factor in a mortgage, you know, they don't factor in taxes. All I mean, they're when a guy makes 100,000 a year, he's not making 100. It's not like here's 100 cash. Okay, he might be making after taxes and all that what like 75, 80, especially in this day and age. So that's 43%. That's a lot of and they're giving them mortgages as much as they can. Hey guys, you qualify for, a $6,000 payment, even though the guy's like, wait a minute, I can only afford 3,500, but they'll give him whatever he'll take on.
It's interesting here, high mortgage balances, high mortgage payments, and little equity cushion if prices soften. Prices are softening, as well as the end to many COVID-19 forbearance programs will be the prime drivers of the 26-27 REO inventory. So they're setting this up. They're basically saying that 26 through 27, we're going to see a lot of foreclosures. Who do you think the foreclosures are going to go to? Do you think this is going to be inventory that hits the retail market? Or do you think that they're going to do like what they did back in 2009, 10, 11, where they're continually bundling these mortgages and selling them to Wall Street type companies?
Yeah, I don't. They're not gonna. Well, I will see very little through my portal just because they're Fannie and Freddie they're gonna auction them. They're doing it now. They're sending those to those those pools and they're getting rid of them that way. They don't want to look bad. The government's trying to be like, hey, it's not our fault. There's no everything's great. They if they ran those through which they should run those through foreclosure, because if you did that, it would be more inventory. Boom, they get the property back, paint, carpet, whatever. You got a new buyer. It's a new dream for somebody. But they're going to keep pulling them because they don't want to be like, oh, Fannie's got all these foreclosures now. That'll make that looks bad.
Yeah, and a lot of agents are probably thinking that they're going to get busy with foreclosure. I kind of am coming from the camp personally where I don't think that they're going to hit the retail market either. We have a situation on our hands where they're not going to want this publicized.
Right. The only way is if it completely bombs out, which I am absolutely not ruling out, is if everything just bombs out where they have too many to deal with. Stay tuned because, I could see this being a complete burnout. Wait till all these factors start banging into each other. When everything gets really bad, they're not going to have a way out of it because you won't be able to save somebody whose house just dropped 40 grand in 6 months, which is what, 08. That's where everything just cascaded at once. I am not ruling that out right now.
You can look at this chart here. You could see that through the prime pandemic years of 2021 and into 22, they were historically low. And you could see prior to that, even 2018, I mean, still much higher than where they are right now. And obviously we know that is because of what you've been explaining, these continual workouts and not foreclosing. People leaving their houses, then being afraid to foreclose on them or change the locks because they could have some type of criminal implications of an illegal lockout.
Hey, Todd, it's like, too, I love how it's like, we're still way below pre-pandemic level. Well, in 2018, 19, we didn't have all these people getting workouts. That's what I mean. It's all deception. It's just, well, we're still good. Foreclosures we're below pre-pandemic levels. But you're not looking at it's the tip of the iceberg, man, and all this mess is behind it. And that's the problem with it. It's like, oh, but John, foreclosures are still way down. It's like, yeah, but you're not looking at the people that aren't making their payments.
You think we could have another 08?
Yeah, I think it could be worse. I could see it being much worse. I mean, everything's teetering on the brink, and it's like, people are only going to pay these, ridiculous prices for so long before they just throw in a towel and walk away from it.
Sheila, thank you so much for your super chat here. Sheila Grace, good to see John and the raw truth. People love you, John. Every time we have you on. Housing in the U.S. is a casino propped up on mortgage-backed securities, Wall Street crackheads. Everyone loses. Nothing gets resolved, and the GFC 2.0 is now in full motion.
Yep. See you there.
See you there.
Man.
It's funny because the heat that we took in 22, talking about the housing market crash was coming, we certainly couldn't foresee just how it would be continually propped up. But one thing that we knew for sure was that it wasn't sustainable.
Right. It's coming. You knew it was coming 3 years ago.
You knew it was coming. I mean, the exuberance was unbelievable. Anytime you pump that much hot air into a balloon, it's only a matter of time before it pops. And it's popped. I mean, I'm telling you, we are in a market right now where if inventory isn't move-in ready and it's not priced to sell, it's sitting. Our hottest markets here in Maryland, price reductions, back to actives, the homes going under contract, they're doing their due diligence, having their inspections, the seller's not willing to make repairs, and in a lot of cases, or repair what the buyer's asking for, and they're going back on the market. And this is happening. Prices are declining. I had somebody say to me the other day, they said, but yeah, isn't October one of the hottest months historically in the housing market? And I would say next to April, May, and half of June, October historically is a busy month. I mean, that's right before the holiday season. We're seeing people coming back from their vacations. They have their kids back in school, or maybe a lot of these first-time buyers have graduated. They got jobs. They're now in a position where they want to buy a house. And so, yeah, historically, October's a great month, and our sales are reflecting that. I mean, we are seeing a definite uptick in transactions, but it's still extremely slow. So when we're looking at it, where do we go from here? Well, we're going to nosedive. We're going to hit November. Thanksgiving's right around the corner. Then you have all the holidays, and you're not going to expect to see consumer activity at best till after the first of the year. And what's your prediction of the spring market? You think it's going to be a fiery spring market like a lot of these housing market analysts are saying, like, oh, yeah, the end is over? You're just telling us it's just our foreclosures are ramping up. Do you think if we saw more retail front houses foreclosures hitting the MLS, do you think that will escalate the home price declines? Thanks so much for watching. If you like the video, you can let us know by smashing that thumbs up. And if you haven't already subscribed to our channel, please consider doing so now. Hit that alert bell. You'll know every time we upload content just like this. Keep those comments and questions coming. And one of the biggest compliments you can do for us all here at Sachs Realty is to share our channel and this video with your family and friends. This will help us to continue to build this amazing online community with viewers just like yourself. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.